Happy Tuesday, Masterminds. Hope you're all having a wonderful day and hope you had a great Australia Day long weekend as well. Coming to you on the Tuesday, not the Monday. Quite fortunate, I think, because the US markets have opened, we're getting a little bit more information. Yeah, this is an incredibly fun, interesting moment in time. Not so much in the Bitcoin and crypto market, but broad markets, which may indicate a shift towards Bitcoin at some point soon. So that's what I'm really looking at here. And why I say that is we think about AI last year. We think about metals at the back end of last year and also this year, silver, gold, all them taking off. It's really taken the ire off something like Bitcoin. The attention has really shifted. What happens though once silver and gold begin to consolidate and fall away? I think silver here is actually doing a blow off top. If you look on the lower time frames, you certainly can start to see that. This can go higher, yes, but we saw this morning it went up to $118 a US. This is parabolic. This is straight up. This is brewing a pretty nasty fall away. It's rebounded pretty strongly in the last few hours, but I think we all should be watching this. So this is a nice correction, potentially before it goes a little bit higher. However, this could be the start of a lower high and a rollover if we just keep pushing up to these higher levels there. That big red candle is pretty nasty. Doesn't mean it can't continue though. But I myself moved on, at least I'm looking at it through a family member, to sell my silver holdings, most of it, into cash right now. I'm not going to a dealer. They'll charge me incredible spreads, and I'm hearing that they are just trying to lowball you and then they're selling at a premium. So I think the paper markets are driving a lot of this nonsense. I think this is coming back to 100 at some point. Don't know when. Don't really care. Looking to free up liquidity. It's gone parabolic. I just need to take some liquidity off the table. That's how I feel at this stage. Now, this comes back to your overall strategy too, because I'm going to share with you today. So this is going to be a strategy session. So I'm going to share with you the exact strategy Joe and I are using for the fund. It's what you can use to some degree in your own portfolio. I'm not following it to an absolute T, but it's a different kind of thinking when you're managing a really big portfolio. And we'll go from there exactly what we're seeing. So for mine, because I own physical, I want to sell the physical or some of it here. I mean, this is just feels like a good time. Whether this is going to flow over into copper and elsewhere, I don't know. That's the consensus that I'm saying, thinking that palladium and copper is going to follow. It probably does to some degree. Gold as well is just going straight up vertical. So yeah, we're in a very interesting point. This is sniffing out a ton of different things, including debt, debasement, the Japanese situation, which I'll get into in a sec, and geopolitical fears. The US Treasury collateral is beginning to be offloaded. So this is the shift. Kind of been talking about for many years. It does look like gold is assuming that reserve situation. I am still convicted on Bitcoin. I do not think in this environment the Bitcoin stays down forever. And as soon as this begins to peter out, I am laser focused on. I'm watching for some kind of rotation here. Now, Bitcoin's doing its very, very best to head fake us all by closing on the weekly underneath the 100-week moving average. It's trying to hold above that on the daily. Doesn't mean much to me though until the weekly close next week. I'll get to that in a sec, but just wanted to show you metals because what the urge is here is because the metals have been so strong, you want to shift your entire portfolio, shift a large percent of your portfolio into these metals. And I know we've been very strong on that, but we also have to think with our heads here a little bit. Are we just moving from something that's at a really low ebb and really flat into something that's going parabolic that might actually be at the end of its run pretty soon? My senses, and John, I had the sense this morning that these things are looking like they are either at a blow off top or approaching a blow off top relatively soon. So we felt it is smart to de-risk from those positions and actually move more into dollars. Now, dollars are problematic also because there's the Japanese situation with the devaluation of the dollar, which I cannot get into in a sec. But the safest place, if you are unsure about crypto exposure right now, is not actually the metals. It's actually dollars because it allows you to sit back and wait. If you're looking to buy precious metals and equities and all that, sit in dollars, wait, hold, be patient, look at the levels you're looking to acquire this stuff on because you don't really want to be buying this stuff at the tippity top. And that's the trap you might get into. You might actually rotate all your capital, your liquidity from Bitcoin and crypto into metals. You might be getting out before Bitcoin and crypto fall over, but you might be moving into gold that's about to fall over itself versus going into, a stable currency that you can hold, wait, and add on dips and go from there. Wanted to share that, guys. Now, let me bring up the Discord. Now, I'm going to share with you the fun Discord. just for ease, I want to show you the exact decision making that we're looking at here. So we're concerned about Bitcoin, but we're also looking at the metals and going, okay, if there's a rotation, it could be pretty soon. And that might mean Bitcoin goes higher. That's kind of the thinking in the back of our heads, but ultimately we're using technicals to guide us on where do we get aggressive again? Where do we want to risk off and go from there? So what we're looking at to do here in the short term is to manage 10% of our Bitcoin position in an OCO. So one cancels the other out, meaning you can set a sell order above, take profit, and also you got a stop loss underneath at the same time. If one of them gets triggered, it's canceled out. So we've got that. So 10% of the Bitcoin holding position at 91,000. So if the 10% of the Bitcoin hits 91,000, it gets sold. Because in our view, 91,000 is kind of the upper limit of this, whatever tight bear flag range that we're in. If we get to 94,000, different story, but that's okay. We can always go back in at 94,000 or above 100. They're kind of our litmus tests. If we get above those levels, we're interested again. But right now, we're playing the percentages. It makes sense to sit on the sidelines and just wait for Bitcoin to do what it wants to do. Stop loss here is at 86. So right now we're at, I think, 87, 88, that type of region. It's close enough that if we're wrong about the 91, the stop loss gets taken out anyway, and we've missed, 0.25% lower. That's fine. Another thing that we're doing is reducing our Pax Gold stack. So we're hedging our portfolio mostly in gold. We are aware of two things though. One, gold is incredibly extended, vertical. So we want to be very careful holding so much in gold right now. And two, we don't want to keep moving more and more Bitcoin and USD into gold in case it does roll over. And three, we are very acutely aware because of personal trading and previous instances where the liquidity on Pax Gold is actually rubbish. So if you're dealing in seven figures, if you're dealing in millions of dollars of capital, and you're looking to set stop losses and liquidate gold quickly back into Bitcoin or gold quickly back into USD, you are going to have a hard time of it. And if you've got stop losses at certain levels, they may not trigger, or some of it might fill and the rest won't. And then you have to chase it a little bit lower. Or if you market sell on whatever price, you might pancake the order book much lower down and get a pretty big haircut to your capital. So you have to take sort of action based on what the market's presenting you. And right now, there is actual risk holding that much Pax Gold because you don't know if you can actually liquidate it when you want to. So the smart thing to do here is, yes, overextended gold. Let's begin to chip away at the percentages. Let's begin to sell some of the Pax Gold back into Bitcoin in case we're wrong, and also, but majoritively rather, into USDT. So you can see here, Pax Gold and Bitcoin, only a small amount, 5%. Now that stop loss is actually beneath the 200-week moving average on the gold to Bitcoin ratio. Now, if you remember the other week, Joe and I were very strong on, okay, you got the 200-week moving average above the gold Bitcoin price, the ratio, and you have the 10 EMA beneath it. Based on where gold went from there, if it strengthened against Bitcoin, we rotate Bitcoin into gold. If it weakened against Bitcoin, you want to buy more Bitcoin with your gold. So we're thinking we're above the 200 now. That's great. But the USD chart of gold looks, again, extended. So just to hedge ourselves and make sure that we're not being silly here, we've got a stop loss just underneath 200 in case it does reverse and Bitcoin gains a lot of strength here. We also had a stop loss at 5,000 on the gold price from gold back in USD. And it was a small percentage, but just to give us a little bit of protection if we win. And that went off overnight. So we've got a bit more USD. So the USD portfolio percentage is, I think, 20 or 30% now, which is great. And if these all fill, then we'll be up to 30, 40, 50% kind of levels, which is exactly where we want to be. It gives us so much flexibility. If Bitcoin rolls over here and gold rolls over here, we can also buy above Pax Gold into USD. So the liquidity on Pax Gold USD is much better. We've got 10% of the gold portfolio in a stop loss at 4,930. So that's against USD. And I believe off the top of my head, that is underneath a shorter term moving average on the daily. It's beneath some structure. It hits that, that's fine. We get out of that 10%. So if all of these fire, our gold position will be no more than, I think, 20%, which is fine. We're happy with that kind of amount in the portfolio. And if it keeps dropping and underperforming and really rolling over, we can continue to rotate it through. But that's our strategy. You can see here, 5% was executed this morning, almost at market. That's fine. So strategy. On a weekly close below the Pax BTC 200-week moving average, so the one I was talking about before, we will have 20% gold max. So